Hey everyone, this is Kirk here again from Option Alpha, and in this video I want to walk through an IWM weekly iron condor that we just tested on our new backtesting engine. So it's going to be pretty cool because we're going to see how this weekly iron condor not only performed, but we're also going to stress test this against a bunch of different portfolio allocations. So first thing here is we ran this first backtest, and you can see the results are showing, but I'll show you here in a second what it is once we go through these numbers. So we ran this on IWM. You can choose your symbol in here. We backtested the duration on this for all time. You can actually choose multiple years if you wanted to and kind of break it down. We usually like to run everything for all time. Trade frequency was weekly, which means it looked for a new position every week if there was room in the portfolio. For capital allocation, we only did one allocation for this one, and we'll show you how to do multiple ones on the video as we keep going forward. But for the starting one, we did a $20,000 starting capital balance, and we just did 5% of our capital per position. So it's just got a good cycle of, really a fairly aggressive, I would say, iron condors in IWM moving forward. And then we did the strategy as an iron condor. You can see we can choose from all the different strategies that we have available in the backtester. For entry conditions, we had a short delta of 50 and then a long delta of 5. So even though it's technically an iron condor, it actually is really going to perform more like an iron butterfly in IWM. And so in this case, you can change these deltas and make it more like an iron condor and sell the short strikes a little bit further out if you wanted to. We wanted to sell something pretty aggressive here, see how it performed on the IWM. So again, technically in most broker platforms, this will go in as an iron condor order, but it is really going to be trading more like an iron butterfly because you're selling the short strikes at a 50 delta. The long strikes we chose to buy around a 5 delta. We entered this position about 60 days from expiration. We didn't have any minimum or maximum IV rank. So this means that when the position was looking for new entries, it would still enter a position even if you were in low implied volatility environments. For exit conditions, we did not take any profits, we did not have any stop losses, and we exited the position 2 days before expiration. So what's really interesting about this particular run that we do in this video is that this is really kind of the lazy iron butterfly / iron condor in IWM. This is entering a position, letting it go all the way to expiration, win, lose, or draw, and just managing the position right before just to avoid assignment. And ultimately, if you turn this into a bot, you would do the same thing where you just let the position go, and 2 days or 5 days, whatever it is for you, before expiration, you just close the position, whatever profit or loss you have, and remove the position so you avoid assignment risk. So it's a pretty bare bones example of how you can run just a very simple strategy just to see if this, kind of foundation here for this iron condor is profitable or not, and then you can try to build on top of that with different allocations or different profit-taking, metrics or IV rank metrics, etc. So again, we just simply ran that test, and then here were the results for this particular test. It looks like it did pretty well. That just a regular weekly iron butterfly / iron condor in IWM with no profit taking, no stop loss, did pretty well. You can see that it had a number of little downturns that it had in its position. Most notably, the biggest downturn it had was during the market collapse here in 2020, but still overall made some pretty good money. This was with 5% of your capital allocated. As you scroll down, you can see not only the stats for the position with drawdowns and performance metrics, but you also see a lot of the win-loss, consistency metrics. It won about 64% of the time, which is really interesting because, what a lot of people see in broker platforms is that when you actually price out or try to calculate the win rate of iron butterflies or really, wide iron condors like this, what you find is that the broker platforms generally have these winning about 50% of the time. But what we always try to tell people is that they win actually a much higher percentage of the time just because of the overstatement and implied volatility. So it was really interesting because you could see, again, what your best win was, what your biggest loss was, still a profitable trade, even though your biggest loss was significantly bigger on a dollar basis compared to the biggest win. But it's really interesting to see, kind of what those metrics are. And then you can see the position averages, how much you're risking, how many contracts on average, how long you were trading it. Again, you can see pretty much you're trading it all the way to expiration. And what we do in this version of the backtester, which is going to be released soon, is we actually show you all of the trades that it made and all the dates associated with it and the P&Ls, which we didn't do in the original version, but a lot of people asked for this, so we do show it now. And again, if you had multiple contracts, in some cases you were able to enter 2 contracts, great, it would enter 2. If the risk allocation just was maxed at 1, it would enter 1. But you can see these are all the trades that it made, so you can just go in here and scroll to your heart's content essentially and make a see what all those trades were. But what I want to do now is I want to actually change up the capital allocation. So what's a really interesting feature, and we thought was really valuable and powerful, was the ability not only just to test the underlying ticker symbol and the strategy, but to test different allocations and compare them against one another. And so this is something that we built, which is the ability to test different capital allocations based on these very simple metrics. So testing the percentage of capital per position, the percentage of capital per position with a max overall percentage of capital allocation for all positions at one time. And then same thing here, a dollar amount per position, and then a max dollar amount per position with a max total allocation. So in this case, we're going to add an allocation where we're going to test, let's say 3% of our portfolio for each position with a max allocation of say 7%. And again, you can just come in here and test as many of these different versions as you want. And then we're going to test another allocation in our case, which is just doing a max position size of, let's say, $1,000. So in some cases, if it's risky more than $1,000, it obviously wouldn't enter the position. Anytime it did have enough allocation to enter $1,000 of risk per position, it'd be able to enter that position. So we just go here, save that, and then we just simply rerun the backtest. And it should pop up with new results here. All right, so here's our new results, and you can see the different allocations are shown here. So we've got the green line, which is our original one. We have now 3% of our capital per position, max 7% total for all positions, and then $1,000 per position is the one here in orange. And you can see really that this essential 3% per position with max 7% really didn't make any trades. It never got to the point at which it was able to make any trades whatsoever. You can see there were no positions entered. So now you know for this type of strategy, and this is what I think is actually cool when you get these no results here, is that you can see that this type of allocation was probably too thin, right? It was probably too low of an allocation for such a wide strategy on IWM. So now you know you maybe have to adjust it. If you did $1,000 per position, you start off really well, and as the portfolio grew, you still did fairly well as it continued to move. But as the portfolio grew, you really just never really got an opportunity to increase the position size because $1,000 really didn't cover a lot as IWM's price went up. And so again, in this case, it was too low of an allocation. Now, I did these deliberately on purpose so you can see how you can adjust these and tweak these very quickly to see exactly, what might work a little bit better for you. So now let's go the opposite direction. Let's make these a little bit more aggressive this time. So let's do this one at 5% per position size with a max allocation of 35% at any one time. Let's do this one now with, let's just do really, really insane risk, which is, let's say, $10,000 per position. Essentially, we're starting with a $20,000 account, so $10,000 per position is basically half of our account starting at any one point. Again, it would probably be really risky, but we'll see what happens. So we run the test, and here are the results. So in this case, the 5% per position and the 5% allocation at any one time, those basically overlapped each other for the whole time. The $10,000 per position one got real lucky. And I would say it got insanely lucky because this one ended up crushing everything else by a wide margin, but it only crushed it because the first initial trades were really profitable. And so that obviously set it on a really good trajectory where it made some really good money out of the gate. You do this on a couple other strategies, maybe where you have an early down move or an early downtrend, you might get yourself in a world of hurt. But in this case, it ended up working out pretty well. And you can see that, it had really good performance. But again, you got to take it with a grain of salt. Maybe it didn't work out as well if you would have had an early loss on the position. So we'll try some other ones here. So let's do this instead. Let's try some different allocations here. Maybe something a little bit less aggressive than $10,000. Maybe we'll do about $7,000 per position. See what that ended up looking like. We'll keep our 5% allocation there. And we'll do, in this case, we'll bump this up to, let's say, 10% allocation per position and see what that comes up with. So again, you can just run these on the fly like this, which is really cool, and get results back pretty quickly. All right, so here's the results of these ones. So now you can see we're starting to, in many cases, outperform the original 5% allocation But as always, you got to take it with a grain of salt and look at the numbers and metrics. In this case, you can see the middle line, which is in blue now, is the 10% allocation per position. Again, you probably got really lucky early on with a pretty good move up with some winning trades, and then it just continued to move, pretty steadily from there. As always, because you have more capital allocated per position, when you get these larger allocations like 10% versus 5%, then you can see the drawdown when markets are really bad, obviously, is significantly higher. It's just if that total line is still above where it would have been to begin with. But you can see this allocation here really did pretty well, this 10%. The actual one that beat it out, though, by a large margin was actually 7% or $7,000 per position. Again, still a really aggressive strategy. But in this case, it was a lot more stable P&L to go with the dollar, percentage. It didn't have, the massive drawdown percentage-wise that you had here. So it was potentially a little bit better strategy to go with some sort of dollar allocation in this point with IWM's Iron Butterfly, Iron Condor. Really interesting just to kind of look at the metrics here. Again, you can just toggle between all of these and see all the trades that it made and how many contracts it traded. It's really, really flexible to use. So hopefully this helps out. Again, the idea behind running tests like this is not to say that one strategy is 100% better than the other, but is to really kind of find that strategy sweet spot that you like, trading wise, as far as win rates and P&Ls and capital allocation, but also to go in here and start using this capital allocator to test different theories and different hypotheses that you might have on where you start with capital for positions and what your account might look like moving forward. So hopefully you guys enjoy this video. If you do, let us know, give us a thumbs up, share this video on YouTube. That would definitely help us out. And until next time, happy trading.